Hey everyone, welcome back to Corporate Decoder, where we try to figure out if this company is selling more than just fine print. Today we are diving into a report filed by Alexandria Real Estate Equities Incorporated, and let's just say they are playing a little game of financial hide and seek with their $750 million note. So what is the big deal? Well, on the 10th of February of 2026, Alexandria Real Estate Equities Incorporated, along with their guarantor, Alexandria Real Estate Equities LP, inked a deal with some pretty big names in finance. We are talking about Citigroup Global Markets Incorporated, BofA Securities Incorporated, JP Morgan Securities LLC, Scotia Capital User Incorporated, and TD Securities User LLC. These are the folks acting as representatives for a bunch of other underwriters, and together they are facilitating a massive sale of $750 million worth of senior notes. These notes are essentially loans the company is taking out, and they are due to mature all the way back in 2036. Remember that year, 2036, because that is a long time in the world of finance. This is the heart of the filing, the big event. The company is raising a hefty sum of $750 million by issuing these senior notes. Think of it like the company is borrowing a ton of money from investors, and they are promising to pay it back with interest by the year 2036. The interest rate on these notes is set at 5.25%, which is pretty specific and important for understanding the cost of this borrowing. Now, why is this guarantee important? It means that if Alexandria Real Estate Equities Incorporated, for any reason, cannot pay back these notes, their guarantor Alexandria Real Estate Equities LP steps in and has to pay instead. This makes the notes a safer bet for the investors buying them, as there are two layers of promise to get their money back. This sale is happening because the company needs money for something, and this is how they are getting it. They are essentially selling pieces of a promise to repay a large sum of money in the future. It is a standard way for big companies to raise capital for their operations, expansion, or to refinance existing debt. This filing tells us about the offer of these notes. It is like advertising that they have something to sell, in this case these debt instruments. They are letting the world know they are looking to borrow money under specific terms. And then, just a bit later, they announce the pricing. This means they've settled on the exact terms, including that 5.25% interest rate and the effective price at which they are selling these notes. This is a critical step because it locks in the cost of borrowing for the company and the expected return for the investors. This document, the underwriting agreement, is the detailed contract between the company and the banks that are helping them sell these notes. It outlines all the nitty-gritty details of the sale, including the responsibilities of each party, the conditions that need to be met for the sale to go through, and what happens if things go wrong. These banks are essentially taking on the risk of buying the notes from the company and then selling them to individual investors or other institutions. Let's quickly touch upon what Alexandria Real Estate Equities Incorporated does. They are involved in real estate, specifically for the life sciences industry. So think of them as landlords for biotech and pharma companies, providing them with the specialized spaces they need to operate and innovate. Their stock, called R, is traded on the New York Stock Exchange. Now, when we look at taking on $750 million in debt, it begs the question why? And what does this mean for the company and its shareholders? Companies take on debt for various reasons. It could be to fund new developments, acquire more properties, or perhaps to refinance older, more expensive debt. The key here is that this is a significant amount of money, and the company is committing to servicing this debt for the next decade and a half. From a Warren Buffett perspective, we always want to understand the business's ability to generate cash. This debt issuance suggests the company is confident in its future cash flows to cover the interest payments and the principal repayment. The 5.25% interest rate is a cost of capital, and the company must believe that the projects or investments funded by this money will generate returns higher than this cost. However, taking on substantial debt also increases financial risk. If the life sciences industry, their main client base, were to face a downturn, or if interest rates were to rise significantly faster than anticipated, servicing this debt could become a real challenge. We also need to consider the company's existing debt levels. Filing these reports with the SEC is all about transparency, and while this filing highlights a new major debt issuance, a full picture would involve looking at their balance sheet to see their overall leverage. So, what is the story here? Alexandria Real Estate Equities Incorporated is making a bold move to finance its growth through a large debt issuance. This signals confidence in their long-term strategy and their ability to attract capital. The guarantee from their LP entity adds a layer of security for investors, which is good. However, the sheer size of the debt means they will be under pressure to perform and generate consistent returns to meet their obligations. It's a balancing act between using leverage to grow and managing the increased risk that comes with it. Now, looking at these results more broadly, Alexandria Real Estate Equities Incorporated is positioning itself for growth in a specialized sector. Their ability to secure such a large debt facility at a fixed rate indicates market confidence in their business model and the life sciences real estate market. The key risks to watch will be the cyclicality of the life sciences industry and any potential shifts in interest rate environments that could make servicing this debt more burdensome. The opportunity lies in their continued ability to attract and retain tenants in a market that demands highly specialized facilities. Alright, that is our quick dive into Alexandria Real Estate Equities, Incorporated's latest filing. What is your take on this big debt issuance? Does it signal strength or a potential future concern for you? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And hey, we have a Discord community linked in the description where you can chat more about these filings. Thanks for watching, and we'll see you next time on Corporate Decoder.